Okay, so we have some breaking news that Keith Gill, aka Roaring Kitty, deep effing value, has taken a 6.6% stake in Chewy, Ryan Cohen's company that he founded. His stake is 9,001,000 shares. Now, this is a very important number because that's the exact same number of shares that he was holding in GameStop. And based on his account at the last time we saw it, he doesn't have the ability to afford both of these positions at the same time. So what do you think's happening? GameStop dropping, Chewy moving higher. So let's jump into it. We've got the SEC filing right here. This is a 13G filing. It's required when you take a large stake in a company, and that's exactly what Keith Gill has done. He also added a question here. Check the appropriate box to designate whether or not you are a cat. I am a cat. I am not a cat. Boom. Check that he's not a cat. So it is official there on this filing that he is not a cat, but he's just a man with a 9,001,000 share position, as you can see right here. That's 6.6% of Chewy, which makes him a large shareholder. So if we look at the Chewy chart, what we know is that last week, you'll see that there was a massive spike. It was right here. And this corresponded to a tweet that Roaring Kitty made. This was the tweet right here. Now, why would anyone interpret this to be anything related to Chewy? I mean, it's a dog, right? But notice the color of the background here. That's the same exact hex code, color code as the Chewy website. All right, so definitely a not so subtle hint at Chewy website. And so based on that alone, this tweet, boom, all of a sudden Chewy spikes up. So you can see this massive move right here. It literally goes from $28 a share all the way up to nearly $40. Really impressive. That's like out of nowhere, a huge move on heavy volume, as you can see right here. So we get this really big move up. And I noticed on Twitter that the account Unusual Whales, which did a really good job identifying Roaring Kitty's purchase of options back in June. They were tracking the purchase of options, and they said, we've been tracking a big whale buying huge blocks of options on GameStop. And then that Sunday, Roaring Kitty posted his 120,000 contracts that he was long of options. So they were tracking it basically as it was happening. So last week, they commented that someone was accumulating a large position in options on Chewy. All right, so a large accumulation of options on Chewy, and those ended up getting sold. So they said close likely for a 100 to 200% gain. All right, so, and the open interest declined. So this is the same, basically the same as what we saw on GameStop, where we had high open interest because he had accumulated a big position, and then the open interest dropped as he sold. So in other words, it appears that he took a large position in options right here prior to this, then takes some profit, but obviously exercises some, or we don't know exactly, but exercises some because the open interest went down, and is now a 9 million share holder of Chewy. So what do you think was going on with GameStop? Well, GameStop is declining because does this mean he's abandoned his GameStop position? Now, of course, we have to recognize that there's a lot that we don't know. We don't know if he made a lot more money than the 200 million that was in his account, and he has it aside in a different account that he can then move back into that account at any time to take another position. He may still be holding both. This could be, the Kansas City shuffle. This could be trying to convince short sellers to hit GameStop. It drops, only for the shorts to get even more buried. But at the end of the day, my gut instinct is that he kind of screwed up that trade on GameStop because he didn't expect GameStop to do a 75 million share offering the morning of his live stream. and he was about to be a billionaire on GameStop, and he was still holding. So there's really, the only reason you would still be holding at that point is because you really thought it was going to go to 70, 80, $100 a share. And I thought it was too. But then the offering came out, it dumps. He kind of went down with the ship and is basically right now, I think would be red on his 9 million share position if he was still holding it. And he might still be holding it, but we don't know. Again, looking at the options from last week on Chewy, we obviously know that there was a large position purchased. Total contracts are, it's like 10,000, 15,000. So, bought and then exercised / sold. So we don't, it's not a absolutely, $500 million kind of position or $200 million position. Certainly a very profitable position, but I don't think enough to support owning both 9 million shares of GameStop and 9 million of Chewy. So it seems like there's been a switch here. Again, all of this is going to be based on speculation because we don't know. Remember in 2020, in 2019, Roaring Kitty was posting regular YouTube videos. He was explaining his thesis. He was giving us the compelling reasons why he liked GameStop. He thought that the business model, the risk to digitalization was overblown. He thought bearish sentiment was way, way extreme, much more extreme than reality. And, he thought that there was a better than 0% chance that GameStop was going to be able to turn around the business. And I don't know if they've turned around the business exactly based on the fact that Q1 earnings were down as much as they were. But obviously, what he did have right was that short interest and bearish sentiment was way overblown. And the short sellers put themselves really kind of like up against the ropes because of the fact that short interest at that time was disclosed and was showing over 100%, 140%. That's like just asking to get squeezed. Now, today, through the use of potentially ETFs, through the use of equity swaps, shorts and big money have found more creative ways to take big positions without showing their hand to the market participants and retail traders like us who want to try to get our piece of the pie. So anyways, the problem right now is that we don't have a thesis. So what are we to do with this information? Now, there are some people that are going to say, well, if he's in, I'm in, right? And there's some people that are going to be like, well, wait, is he still in GameStop? What's going on? Can we get a YOLO update? And maybe we will get a YOLO update on on Reddit today for where his position stands. We've been kind of waiting for one. The last one was right here, as you can see. It was June 13th, so it was weeks ago. And this is where things were at that time. He was holding 9,001,000 shares of GameStop at $23.41 a share. So as of right now, that position would be at a loss, right? And what's worse is that look at the volume on GameStop these last few days. It's been trading an average of, 25, 30 million shares. So if he wanted to sell the full 9 million, it wouldn't be really easy to do that in one day without tanking the stock because of the huge imbalance that he would create to the sell side. So he would have to be kind of unwinding it slowly, although what we know is that his last update was on the 13th. And we saw several days of high volume here. So for all we know, he could have sold his whole position right here, which would give us a sad face. But it's possible. So I think for me, because this feels kind of like almost like we're getting trolled a little bit because, we're getting these little memes, what's the implication? What do they mean? What's the meaning behind it? But we're not getting what we got in 2019 and 2020. And not for really, to me, any good reason. I mean, a lot of the big investors go out and actively are on CNBC and talking about what they like about their position. Now, that maybe isn't what Roaring Kitty wants to do right now, and that's fine. It's obviously not because he's not doing it. But on the other hand, back in 2019, 2020, he was regularly making YouTube videos, and at that time, it felt like he was trying to communicate with other retail traders like you and I, and say, look, this is why I like the stock. This is why I think this is a good pick. And he was kind of the underdog because he was choosing a stock that nobody else really cared for too much at that time. So why is he choosing Chewy? Right? Give me the backstory. Give me the history. So when I look at Chewy on the daily chart, well, no doubt, its chart is a little bit funny because of this candle, but we can see that Chewy is up, almost 100% on the year. In fact, just in the last few months. Would it be a deep effing value position to buy something that's up 100%, in 3 months? I don't know. Well, I guess it depends on where you think it's going from here. Back on the chart, we step back a little bit further, and you can see that Chewy benefited from, all of the excitement in 2020, and of course the the online trading and everything else. The kind of the world in COVID shutdown that created such a interest in online stores and trading these types of stocks, meme stocks is what I'm trying to say. So up to 120, now it's coming back up. If we look at the filings here for Chewy, what we'll notice is that their trailing 12 months looks pretty good. Trailing 12 months here for revenue per share is looking good. EBITDA per share, earnings per share. You come back down here a little bit further. I want to look at so gross margin right here. So their gross margin is improving over time. That's good to see. Their debt to equity is good. They've got revenue down here, which is increasing, which is great, right? Gross profit, which is increasing. Got their profit margin. Let's look for free cash flow here. Free cash flow. Where's my search? This browser's running slow. Free cash flow. Not per share. So free cash flow right here, trailing 12 months, this seems pretty good. It's increasing. So based on just a couple of those data points, this is looking good. But the current price, so the market cap right now, trailing 12 months. So January 2023, right? So it peaked in 2021, right? That of course makes sense. The market cap peaked at that time. And then we kind of were declining January 2022, right? And then came down a little bit more. So by January of 2024, the market cap had declined quite a bit because we were all the way down at $15 a share, but the trailing 12 months is a little bit higher. In any case, you could do the market cap just by multiplying the number of shares outstanding by the current price. So it's currently trading, its current price of $27, $28 a share, well, higher now, pre-market 32. I'm not sure. The thing is, we're in the position of trying to figure out all this stuff and be like, why did he buy it? What's the cat? What does he believe? What does he think? And he was potentially did he abandon GameStop? So I think traders are going to struggle with this a little bit, not knowing whether or not they should be following him into these trades or just, kind of abandon that idea. The fact that, it's up, but it's only up for what's worth 17%. It's got a 362 million share float, right? So the float is pretty high, certainly relative to what GameStop was when the short squeeze began. At that time, back in 2020, when the short squeeze, in 2021, when it started to pick up, the float was only like 40 million shares. So it was quite a lot lower than, than it is right now, but yeah, and lower than what Chewy is comparatively. So I think the fact that this isn't at like $70, $80 a share, like speaks to the fact that traders are cautious, and maybe Roaring Kitty's being cautious as well because of his clear ability. He's got a lot of power, right? You know, people respect him. They saw how well he did on GameStop. They're looking for what's going to be his next position, et cetera, et cetera. So he's probably trying to be a little bit careful, but just I think it leaves us, you know, we're getting these little breadcrumbs. We're getting these little hints at what he's doing a little sometimes beforehand. But what are we to do with that? You know, just I think it would be naive to just blindly follow him and hope that this is going to be the next GameStop, especially without understanding what his thesis is and why he likes the stock and everything else. This is the first time that we've seen him switch to a different stock in all the years that, you know, we've been following him at this point, right? So it's a big moment, but we have to be wondering what's the thesis. Now I can look at the filings and you can look at them, you know, just the same as me and notice, you know, there are some things that are interesting here. Right. So, and let's look. So current market cap is $11 billion right now. What was the gross revenue? I think it was about the same. So where were we? Gross revenue. So now what's interesting here was that GameStop back in 2020, when Roaring Kitty took his first position in GameStop's market cap was $250 million, but their gross revenue was like $6 billion. So I think what was something that was compelling here was that they were trading, their market cap was, you know, like 4 or 5%, whatever, of gross revenue. So right now, this was GameStop, GME. So right now, Chewy market cap, and market cap is shares, which is about 369 million, times price, which is 32. So we've got a market cap of about 11 billion, right? And their gross revenue is, well, we just saw it's 11 billion. So they're trading currently at 100% of gross revenue. And, you know, this is just one metric that I think is interesting because it's something that Roaring Kitty commented on during his videos in 2020, that he felt like this was deep value because it was trading at such a fraction of its gross revenue. And he just thought, that's crazy. You know, this is a company that essentially you could buy the whole company for $250 million based on its current market cap, but it's doing $6 billion a year in gross revenue. Like this is a company that's doing a lot of sales. There's got to be potential here. This is a company that if you bought the whole thing, it would cost you $11 billion. And as we know, they're doing $11 billion in revenue. So, and then in terms of what their net profit is, and this is where you get into the PE ratio, price to earnings ratio, but you get into what their net profit is, and it's they're producing cash flow, free cash flow. So free cash flow, I think, was 300 million or something like that. So where is it? So free cash flow. Let's go back down here. Yeah, 343 million, which is, you know, that's great. But just if you thought about this for a second, you thought, okay, well, it's $343 million. So, you know, do the math, 343 million. This is, I mean, right? Like just PE ratio alone, it's trading on a PE ratio of, you know, 30, a little over 30, which means that if you bought the company, the whole company today, based on current earnings, it would take you 30 years to pay it off, to be back to break even. So it's trading at a multiple of virtually of 30, which is very high. Now, of course, we've seen companies trade at much higher multiples, and we see that because there's the belief that, oh, well, this within 6 months could turn into, you know, $1 billion of free cash flow. And with $1 billion of free cash flow, if you bought it for 11 billion, it would only take you 11 years to recoup the whole price. And we might even be able to get this to 2 billion If you get to 2 billion, you're going to recoup the whole price in 5 years, right? So if you project that this is going to go higher, then you can start to, rationalize why this is an acceptable valuation multiple of the current company. But nonetheless, it's not really deep effing value. I mean, based on just on my kind of interpretation. And now we see, for whatever reason, that the price is dropping. So no, this is not a specific headline here, but let me just check BMSEC here, Chewy, just to see if there's a shelf. So they do have an automatic shelf registration. This is very common. I mean, given that Ryan Cohen had no issue selling 75 million shares of GameStop, how do we know that he wouldn't go ahead and do that on Chewy? Like, is this not kind of just a layup for big money, and these investors and Wall Street, just to be like, oh, all these dumb money Reddit traders are buying our stock. Let's sell it to them, right? Let's sell them $1 billion worth, and we get to move basically their money onto our balance sheet, and now it's our money. So that's, I mean, given that they have a shelf registration, and these shelf registrations are active for 3 years, so it's an automatic shelf. Let's see. I just pulled this up right now, so I haven't had a chance to read through the whole thing. Authorized capital stock consists of 1.9 billion shares, 1.5 billion Class A, Class B, Class preferred stock. So the GameStop charter also has up to 1 billion shares, I believe it is. So that's not uncommon. Anyways, so that's something that I think we have to be aware of. That's a risk. And is it possible that this thing just comes all the way back down? I mean, unfortunately it is. And if we look at what happened last week, it shoots up and then it basically came all the way back down. By the next day, it was even lower than where it started, right? Because some people got in, short sellers got in, and then people bailed out and short sellers held. So now you've got this imbalance to the sell side. So that's kind of the situation that we're in here with Chewy. Price is declining from a purely technical perspective. I don't see anything to trade right now. The float's too high. The price is too high. I don't like this pattern. I have no trades on it. I've taken 0 positions today, as you can see right here. So, I'm not in it. I'm just kind of watching from the sidelines, giving my commentary on it. I'm very interested, but I expect to be disappointed and to not get the thesis and the clear, compelling reasons why Chewy is a good investment from Roaring Kitty, because we didn't get it on GameStop during this last move. All we got were memes and kind of trolling the media and, this and that. And we didn't get what we wanted. And GameStop on the last run burned a lot of traders. And that's not Roaring Kitty's fault. That's because GameStop itself sold 75 million shares on the open market. So that's what happened. GameStop basically converted all of our equity that we were buying into it to more shares. They now have $4 billion on the balance sheet. We'll see what they do with that money, but it diluted the value of the stock by like 30%. So all of our shares are worth less for those. I'm using our liberally, but all of our being retail traders positions just got diluted. So now he's switching to Chewy. Is the same thing going to happen? Well, I don't know that we can trust Ryan Cohen not to do the same thing, to be honest, given what just happened on GameStop. So I have a hard time understanding the play. I don't understand exactly the thesis. Like it seems like a fine company. They're producing profit, free cash flow. That's all great, but it is up 100%. On the year so far. So, anyways, that's our kind of breaking news here on Chewy and GameStop. I thank you guys as always for tuning in. And if you want to hit that thumbs up and subscribe to the channel for more updates like this, that'd be great. And I'll see you guys for my next episode real soon. Thanks as always for tuning in. Reminder, trading is risky. My results aren't typical, so manage your risk and take it slow.